Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Mike Zuzolo of Global Commodity Analytics. We did see livestock all to the plus side on Tuesday with the grains mixed. And Mike, let's pick apart the grains first of all. Soybeans started off lower, but managed to close steady to higher here. That market has been resilient. Is this still hopes about China, or is this the other demand features that we're seeing to help support the market?
And also the expectations of renewable biofuel increases. I think that's the heart and soul of the soybean market for really the past 3 months, if you ask me, Michelle. And you can see that in the monthly charts. We're up about 0.5% in meal year to date, but we're up about 40% right now, 43% in bean oil at this stage. So the trade's really betting on the come when it comes to the soybean oil demand.
All right. Let's also talk about some of the demand features that we saw in the market today. Strong export inspections on soybeans. Notebook crush was a record, wasn't it, for January?
Yeah, it was. And it was one of the top end ones for the last several months again. That did come at a little bit of a price. We did build a lot more soybean oil out there. We're up about 50% year over year at this stage. And we're looking at a situation where we've got the highest soybean oil stocks since April of 2023. So this relates back to what does the USDA say for the biofuel, the renewable biodiesel side of the equation in their baseline numbers.
Yeah. Well, obviously, like you said, 45Z and hopes there, and the fact that we may get these RVO standards coming up in March. Is the market going to rally more, you think, in the soybean oil futures as a result of going into that with optimism or not?
I think we're at a stage right here where we need to feed the bull. In other words, we've priced a lot of positive news in, and we really need to get the return. And I think that goes back to your last question on the soybean demand and the fact that we're still $35, $40 a ton premium at the Gulf versus Brazil right now, with them just now starting to ramp up. I think the other thing we have to think about, and all the ways in the back of our minds, is like crude oil, has China been buying extra soybeans and stockpiling? My answer is I think, yeah, they are.
The market is bought into the idea, as far as soybeans, that China perhaps will buy the additional 8 million metric tons. Like you said, we probably won't get any evidence of that or any flash sales while they're on holiday. But after that, do you expect we're going to see some sales, or is this going to be business that happens after Brazil's harvest?
Yeah, I'm going to go into the foreign policy side of the equation like we've done before, Michelle. After reading the tea leaves on China and US this past weekend, I don't think the Chinese will buy one bean from us if we sell arms to Taiwan. I think that's what the phone call between Trump and Xi was about, as far as the Chinese see it. And President Trump said over the weekend he would be making a determination on arms sales to Taiwan in the not too distant future. So I'm really hanging my hat on that one feature as far as whether China continues a friendly trade regime with us or not.
Funds, they have been adding to their long position in the soybeans in a big way. So they're of the belief that we're going to get this extra 8 million metric tons of China business. How much more do you think they will add to that long position?
Boy, they could add a lot. I mean, I think there's still roughly 90 to 100,000 net futures and options from their big record late last year, mid last year. But I think it goes back to, they've come back to your point, to buying beans and selling corn. They're doing that, I think, because they still don't believe that the wheat low is in and that the wheat continues to drag on the corn. I think the wheat and the crude oil are two big features at the end of this week to see what they're doing, because I just don't like relying solely upon the soybeans during this time of year as Brazil pulls bean harvesters into their fields.
Yeah. Are you hearing of any problems with Brazil's harvest? I know they've been wet up in the north, and so maybe are there some concerns about quality?
Yes, there is some concerns. My understanding is it's minor at this point. I think the trade is watching the harvest progress, though. In a week or 10 days from now, if it's still an issue, then it becomes an issue, I think, that's worthy of the market's attention.
Okay, so baseline numbers, we're also going to be watching for those acreage numbers out of the USDA Ag Outlook Forum. And what's your, I guess, initial thoughts about how that may play out? We are expecting what, lower corn acres, maybe an increase in soybeans?
Yeah, my sense from other colleagues in the industry is we're not really much above 85 million bean acres at this point. I think that's a little bit fearful because in 2022 we did 87.5, 2024 we did 87.3. I'm at 87.5 again for 2026 just because of rotation. Bean acres, I think, are going to rotate higher. I don't think the trade's really ready for that. Look at the bean corn ratio and the new crop. We're at the highest since the middle of 2024, breaking through 2.42 beans times the price of corn, no versus D's. And so I think the trade's still on this mission to buy bean acres because they still feel like this renewable diesel is a story that has not been completely told yet. Here again, I think the baseline numbers are going to be extremely important for the USDA to bake some of that EPA number and increase into these numbers we see on Thursday, Friday.
Corn market lower on Tuesday. Did we just hit chart resistance there, or did corn get drugged down by the wheat market?
I really do think the charts are big right now, Michelle, because we've gone up against major resistance in corn, beans, and wheat, and it's been 435, 445 on the corn, 1135, 1145 in the soybeans, 535, 545 in the soft red wheat. Just to give you an idea what that means is 535 to 545. We haven't seen a weekly close above 545 since October 1st of October of 2024. In soybeans, I show we haven't seen a weekly close above 1145 since the 1st of July of 2024. So at the end of this week, after all this data and whether the Supreme Court comes out and whether we have good U.S.-Iran talks or bad U.S.-Iran talks, I'd like to see those resistance levels taken out. But for the corn specifically, it's still the best cash market out there. We're still the biggest discount compared to beans and wheat. And I still feel like it's got the best bin space to it. It is still caught up in the wheat market, and it's still caught up in Argentine weather for right now.
And Argentina's forecast actually turned a little wetter.
It did. For the next week, it looks like a lot of the dry spots in Santa Fe, as well as Cordoba provinces, are going to get some rains. We'll still keep an eye on Buenos Aires, however.
You bet. So wheat, as you mentioned, also ran up into chart resistance after that higher weekly close last week. But did we also see weather impact that market at all or not?
Yeah, in a way, I think it was that we don't worry now about the Black Sea freeze as much as we did when we came away from the holiday or before the holiday, because we had some private estimates stoke up the Russian 26 crop, essentially upwards of close to 90 million tons. And I think that just took away the tailwind of the potential that the Russian crop is hurt at this stage. But we're still dealing with multi-month highs in wheat and corn coming out of the Black Sea. We're still dealing with a major war. I think this wheat really does translate back into Russia because of the ruble and because wheat and crude oil are both such big Russian commodities. So I still think wheat and crude oil are very much attached to the hip at this point.
Yeah. And conversely, we did have the dollar index higher today too, right? A little bit of a headwind there.
Yeah, a very important piece of the puzzle was this weekend with Secretary of State Rubio's speech at Munich. He really allayed and eased the fears of, I think, the world financial market of the U.S. going it alone. This seemed to me to bring in some dollar short covering. We really need to watch to see if that's a key, because like those technical resistance levels at the end of the week, I really want to see that crude oil higher and that dollar weaker again to be able to give us some support as we see South America harvest and as we get ready for the springtime here.
So, Mike, you alluded to the IEEPA tariffs maybe being rolled down by SCOTUS, which we've heard that rhetoric before. But if they do rule on it, what's the market going to be watching for? What's already programmed into this market?
It's a great question. I'm going to oversimplify it big time here, Michelle. But what we saw when President Trump put on the tariffs, generally speaking, was a sharply lower dollar and a sharply higher stock market. If the SCOTUS comes in and says, you can't do this and you've got to unwind it, that's the first thing I'm going to be looking for, is a reversal of those two major themes.
Gotcha. Cattle market, new highs for the move in live and feeder cattle futures, pushed mostly by what, a $4.50 jump in the cash market last week, huh?
Yeah, it really came around. It wasn't going to go anywhere, and it's counter seasonal too to see this kind of a jump. And so that was a Mardi Gras day for Tuesday cattle. Nice to see the feeders underneath us as well. And I put that at the feet mostly of a continued strong market out there in the country, as well as a break back down towards that 4.25 level in lead month corn. So I think the funds were back in on the long side of feeders, short side of corn. I would add one other thing too, Michelle, at this stage is while we made a new record high in lead month futures on Tuesday, Fed fat cattle have not hit their contract high. They have not gone up and filled a gap. And so the next technical level to be watching for me is going to be around 247 to 250 plus against that February contract to see if that stops the move up or whether we're going to go ahead and go on higher on some more bullish news.
Right. Those are the all-time October highs that we hit last year. Obviously, we've all been waiting to see if we fill the gaps and go up there and take out those levels. What odds do you give it?
I give it high odds that we fill the gaps because we've got all cylinders running on all eights. The key now will be essentially after the first quarter of 2026 is can we keep consumption in place? Because that's what broke our back in 2015. And yes, there's a lot of differences. Yes, we have a 75-year low in the cattle market, but we had a 63-year low back in 2015. But it was the domestic consumption that really hurt us. So if the dollar goes up and the stock market goes down, I still feel like those are really worthy material pieces of the puzzle, worth hedging paper to protect you from a 10, 15% correction. We could go all the way back down to 320 feeders and hold an uptrend line. So that's the kind of numbers we're talking about here.
And hogs also able to recover after, I don't know, 6 or 7 sessions where we were lower. So was today short covering, or did we get a push from USDA's decision on these NSIS line speeds?
Yeah, I really think that the latter was the big thing. I think, again, the technicals seemed to hold late last week. Everybody, I think, was watching that. But when USDA proposed this modernization on modernized lines, adding chain speed to the pork and the poultry lines in the factories they can, I really think that helped because that just means more consumption, more available product out there on the pork for the shelves for the consumer. That's net positive when you look at the ag economic supply demand fundamentals.
Yeah. And having a higher day in cattle probably didn't hurt, did it?
That's right.
Yeah. All right. Thanks so much. Mike Zuzolo with Global Commodity Analytics and Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.